Welcome to today's market report.
Wall Street and global stocks slumped further on Friday, with government bond yields and the dollar holding near recent peaks as higher than expected inflation capped a nasty third quarter for world markets. Fresh personal consumption expenditure (PCE) price index data, tracked by the US Federal Reserve as it considers more interest rate hikes, showed a rise of 0.3% last month after dipping 0.1% in July. Eurozone inflation also hit a record high of 10% in September, surpassing forecasts, flash inflation data showed. Fed Vice Chair Brainard said the US Central Bank would need to maintain higher interest rates for some time as part of its effort to tame inflation and must guard against lowering rates prematurely. All three major Wall Street indices finished down around 1.5% after a day of choppy trading. It was the third consecutive weekly decline for the S&P 500 and the Dow, and all three indices, including Nasdaq, were down for the second month in a row. The first 9 months of 2022, Wall Street suffered 3 straight quarterly declines, the longest losing streak for the S&P and the Nasdaq since the Great Recession, and the Dow's longest in 7 years. Friday's losses cap a week of global market turmoil that saw stocks and currency markets, already rocked by recession fears, sapped further by a US dollar at 20-year highs. Asian shares outside of Japan fell 0.4% on Friday, down around 13% in September, their largest monthly loss since the start of the pandemic in 2020. European shares saw some recovery, with European stock 600 up 1.3%, but they notched a third consecutive quarter of losses on worry about the impact on global growth of central banks hiking interest rates to counter inflation. GBP recovered to 1.1168 after reaching a daily low of 1.1024. Euro-dollar retraced from daily highs of around 0.9853 due to Fed officials indicated higher rates is needed for longer.
This is today's market news. Thanks for listening. We'll see you next time.